Good morning, my friends, and welcome to the Breakfast Club. My name is Darren Hancock, and it is December the 20th. Just a few more days till Christmas, and it'll all be over. We'll be ready for the new year, and I wish you and your family all the best in this season, regardless of what race or religion, whatever makes up your part of the world. It's the spirit of what this is all supposed to be, not the commercialization of it, but the love of humanity, taking care of each other, loving each other. I know it's a Christian holiday. I'm not going to get into discussing the religious side of things, but I just like the idea that everybody comes together this time of year, especially family, and they share some love, laughter, friendship. So I wish you and all your family the best for this holiday season, no matter where you are in the world. And let's look at the markets. We'll start over here in the futures indexes. I caught a little run this morning. It's not as much as I was hoping for. I got everything I hoped for. I shouldn't say that. There's a little trade I did this morning for bedtime. I caught this trade here. This was the consolidation. This one actually does run out this high. So as soon as you run into that high, you come back down below this with a body. And then you trade back into 50% of that range. You get in on that, and then you short it from there. I got in a little early, as I do. I saw this. I thought, oh, I just missed it, so I'm going to get in. But I came back one more time. My stop loss was right up there. And then proceeded to go down to, wanted to fill this fair value gap here. And because it's in the middle of the night and I'm not monitoring it, I had to set an objective. So these equal lows down here would have been a nice objective. These equal lows down here would have been a nice objective. But I went with a shorter term one. Thinking about it retrospectively now, I could have said, if that's the range, 50% of the range, I was hitting pretty close to 50%. But anyway, that gives you an idea of trade I took this morning. Wasn't a lot, but it helped me take back some of the losses I took yesterday. I think I'm break even now. Yeah, 613. So we've got a consolidation. And remember what we know about consolidations. Consolidations always go into an expansion. Okay? And the rules are, we always go into an expansion, and price can always go from an expansion to a retracement. And price can go from an expansion to a reversal. And price can go from an expansion to a consolidation. But price cannot and never, hear me folks, never goes from a consolidation to a reversal or a consolidation to a retracement. Never, never. Let me just get on my channel here to make sure that we are still broadcasting. And we are. And right now it's just little old me sitting in here. That's okay. start out as you mean to carry on. That's what I say. Oh wait, I've got someone in the Breakfast Club. I'm going to start the call. I tend to forget this stuff. I tend to forget that I'm supposed to be sharing my screen on the Breakfast Club. I just tend to have a chat with the boys when they type something in there. I don't think you're incorrect, my friend, not at all. I just think we say it differently. Initially, that made me think you completely understand the breakers than I did. There's so I've been teaching the last few years, but able to ask questions for clarification and stuff. Just to me, I'm missing information. So I heard breaker at the last telecount before the lowest. Okay, so NASDAQ consolidation, looking for an expansion. If we do get a return back into this Asia low, I'd like to see us return here before running back down again. So an impulse leg up, come back down, find some support at this consolidation. If I run back up into here on the 15-minute. And then, so let's look at the daily candles. These are all 15s. Just go to daily. I do like this return to this high here. So we can continue on the downside for this old high here. We've broken up. We have not come back down and tagged it, so I like this old high. Yeah, they all look like they're coming back to these reset points. You see like this coming back to reset here. That's my assumption today, is for the price to come back into these price points. There you go. That's my 3 price points, objectives for the day. Keep your eye on that area for the daily. That'd be a long run all the way back down then if it was going to come that low. That would be a long run down. Where is that? 93. Oh no, it's possible. These equal highs here. I'm not giving you much verbiage here, am I? I wish I hear some of those guys like you hear Hydra. He can talk and keep the air. Like I'd be a lousy radio host because when I focus, I shut up because I tend to hyper focus and I don't get much communicado going on here. So my apologies. I will try to talk more while I'm and kind of think things through. So I look at these old highs here, old equal highs here as a potential return to, and there's something sitting right in here, this fair value gap sitting right there, there's equal highs. So for me, if I was going to pull a fib tool from here, I'd say what's sitting in here that would support price to come down to that level. So if I pull the fib tool from this low to that high, so that's the range that we're looking at there, right? And look at what 50%, 62% brings us right to the top of the bodies, and also brings us to that the New York Open right here from 2 days ago. So right now that would be my objective to aim for. We've already dropped below the low, and we run back into this right here, that order block right there. It's almost scary, this massive run up in the markets the way they have, that we're not going to get this massive straight line down. There's always that fear, especially after watching that recent documentary that came out that Michael had put out called The Great Taking. I encourage you all to kind of watch it with an open mind, and take it with a grain of salt. I always take these documentaries with a grain of salt now. I remember watching this one documentary that talked about, I think it was the Memphis 5. It was like 5 kids were accused of killing this young boy in Memphis, I think it was. And the way the documentary pasted it or portrayed it made it feel like these kids were guilty as hell. So I'm just sitting there raging about how angry I was about these guys who'd killed this kid. And then as the story unfolds, you start to go, oh my goodness, did I ever not get all the information? Here I am, this documentary totally suckered me into believing one thing, and then ended up showing me the truth in the end. And I thought, wow, how easily influenced are we? It's true when they say television programming. We're really getting programmed by television, and we're really being programmed by what somebody wants us to see. So the documentarian did an awesome job of getting me enraged, like typical people would have at the time, with the only bit of information that they had. Then when the truth finally comes out, these poor guys finally get out of jail, years and years and years later, after being totally innocent, but they've already been pasted and painted with this terrible, ugly brush. So it's like, wow, quite surprising how easily influenced we are to media. So anything that you, I guess, to come back to the story, when you take information like the Great Taking, take it with a grain of salt. You got one person's perspective, and he may be absolutely right. Who knows? I tend to look at the things and say, well, what kind of things can you do to help yourself in that time? And at least he does describe or talk about that, saying, what can you do if this is going to happen? Like, it's not all doomsday stuff, and we're all just lying in wait for the great victim. As a victim, he describes some things you can do to help. First thing is get out of debt. Get out of debt, man, as quick as you can. Stop being a consumer. Put some money under your pillow if you can. All right, so now we're heading for that 50%. I was mentioning these equal highs. So what I saw in the Dixie this morning was this breakdown below this low. So in this little run up, we broke this high. So it's the last down close candle before a run above a recent or old high. It doesn't have to return all the way back up there. Just last down close candle, lowest body candle before a run above a range that it's in high. Okay, and that could be one or two candles behind, but as long as there's a swing point there that creates a high above where we are below this candle, that is the range we're looking for. So as soon as we exceed that high right there, this becomes a breaker. We can trade back to it from the top, or we can eat through it and trade back to it from the bottom. A lot of you may be familiar with as soon as we trade through it, you come back to it and you get short from there. That's fine. You can also get long on it once it comes back to a point where you can touch the top, the open, or the threshold. You can also trade from the top or bottom. What most of you are probably familiar with is the run below, come back into it. Now they think it's a breaker. It's not. It's a breaker the moment it takes that high out. You can trade it from two different directions, from the top or from the bottom. Here's an example here. See a swing point here and that swing point there? This lowest body candle runs up and through it. Then we trade back to it one more time and then run the highs out again. Right there. So you traded back to it and run above it. But it's still a breaker the moment it breaks these old highs here. At least that's my interpretation for the last 7 years, and it works for me. So I'm looking for the US dollar to go down, because here, this little breaker here, we ran this high out. That one there, we've come back to it right here. Look at that. Right off the close. Traded back away, come back in, fill this little void here, not a void, fill this sell side imbalance. Now it's been delivered efficiently on the opposite side. Now we're looking for a continuation on the downside. So this was that run back up, consolidation, expansion, retracement into consolidation, right into the bottom of the consolidation. This is the same kind of trade I took last night on the NASDAQ. This is the same trade. You trade back into it, fair value gap, consolidation, and then pull away. It's like a 2022 model. We have a run above these highs. Didn't take those highs out, but we ran above, traded below, come back up to the bottom, or 50% of that range. You can have one or the other. So now we're taking out the lows here on the 1 minute. Look at that gap down here on the 15 minute. And there's obviously delay in the data on that one. British pound. Well, look at that. We were calling for this rejection block yesterday. Look at that. On the money. No, it wasn't on the money. It was just a little tad short. That candle there, its high is 27.61.9. I was calling for 27.64.6. That order block there as well. Take the halfway point of that, and that's what we hit. So just short of that. I'm not going to say it was mine, but you see 69.2, 70, so it's 2 points. 2 point spread, or 1.7, 2 point spread. So add 2 points to this. 61, 62, 63.9. You're still, even with the spread, I didn't get my joy. But anyway, I think I brought you pretty close. That was the rejection block we were after yesterday. Now the retracement back down. We're looking for this low to get taken out here. So look for a return back into, again, the fair value gap that we just mentioned on the if the American dollar is going down, if we're expecting this to come down, then this is supposed to head back up. So let's look at how we're going to play that. So if we get consolidation, this expansion here, if this is a swing point, we want to get above here with a body, come back in to tag the old highs here. There's a small little inversion fair value gap here. You see that? This is a fair value gap that was filled. We come back inside it, right there, tag the bottom of it. Now we're running for these highs above. So look for a price to run out these highs and start getting back into this consolidation here. That right there is the potential entry, but look at this threshold. This mean threshold has to get broken for me anyway on the upside and a close. So I want to see a candle get above that, come back, find support at it, because this is the last up close candle before a run below a little swing point, a little swing point. We ran all the way down to the bottom. Right there. Did that guy take it out? 64.92. 64.76 did not take it out. So it did take out these swing points. This one here though. Last down close candle. Is not a run above though. Oh yeah, there's a little tiny run there. Yeah, that's why I hate calling breakers inside these consolidations when you got wicks above and wicks below. That breaker almost overlaps itself. That's what makes it very challenging to read. Two candles. Body gets above them, comes back, finds support at them. Continues. So we're between this candle here and that candle there right now. There's a small little busy inside here as well. You'll see it right there. So in a discount array, that guy there, we broke down, ran up, above this high. We get above that high, it'll be a nice breaker. So if we do come back, find support at it, look for a further run up into the higher prices. Start pulling back into this range here. I would like to have seen one more little run down into this area right here, these equal highs. One more drive down, take these out, and then start pushing up. So don't be too convinced that everything's going bullish right now. We make it a 10 o'clock run below these lows back to these equal highs here before running higher. Breaker is the last down counter before the lowest low that exists between two highs. The lowest low that exists between two highs. The nearest high being the higher one than the one before. About some more information and did, and it made me relook at these. I like how you say it. Makes you want to see a run above an old high. To me, that's the critical. Hello. Oh, fucking liars. I hate scammers. When I read your explanation, okay, just thought if you, like I said, run above an old high, to me that's a critical point and one which I've missed. I just thought if you have two highs, the second one being higher, then you pick the lowest down close candle, and that's your breaker. Often it is. But now that I've read your explanation, I think like more because it wants to see a run above the old high. Meanders back to a higher high. I'm not sure the breaker is worth it. Still in mind, I'll sell. Trade closing in the bank. Today I'll see 1 for 1. Oh, you on a Dow trade this morning? Good for you. Good for you, Derek. I want to see this. We've just run that low out. There's no high back here, so I'm still looking for 50% of this thing here. So if we do get a retracement, where is it coming back to? Inside that fair value gap, order block, retracement, back into order block, breaker. See how that's a breaker? Last up close candle before a run below these lows. So you found some support at it, reacting off of it. You want to see that continue down now. I want to see that hold price. If not, we're going to run through that. And I like to see breakers hold price. And head for an opposite end of the spectrum. So breaker, if we're going to trade breaker to a discount breaker, where's my discount breaker? What thing am I looking for here? This one here, this one, you can add them all together for a higher time frame candle, or you just look at this one down here at 37,739. 37,739. That puts you in here somewhere, right before optimum trade, or right inside the optimum trade entry. If we get a return all the way back into here on the 15-minute. Target one hit. Good for you, man. I love hearing people making it. Let me finish off the rest of my analysis here. I'm looking for Canadian dollar to continue down. It's hit our objective we talked about yesterday, which was the fair value gap daily. We've hit that perfectly today. We had a bit of a reaction back to the order block, and now we're continuing down into that recent low, consequent encroachment of the daily fair value gap. Those are our objectives on the downside. And New Zealand dollar. You're welcome. You're welcome, ladies and gentlemen. I told you New Zealand dollar's got a tendency to take off in December, right? So why didn't I get on it, you say? Damned if I know. Damned if I know. I was so waiting for that one too, but wasn't focusing on it enough. I was all stuck in these indexes. But anyway, I hope one of you got out there, have gone on top of this old high return to just take off, the one that we've been calling for, that return the other day, right on the money, left. That's the next objective, is the midpoint of that up close candle right there. Last one. So look at that mean threshold, 63,449 for an upside run. I still like these equal highs up here. Like there's a whole candy land and a fair value gap sitting in here, and two more equal highs above. So new year, you're looking at another 300 pips, 200 to 300 pips for New Zealand dollar. Australian dollar, same thing. Aussie dollar is going to give you another 200 to 300 pips. It already hit the objective we were aiming for yesterday, so the next one is this mean threshold here. So look for that price on the upside, and then rejection block and higher. We're still inside the consolidation on the Japanese yen upside order block. Okay, let me drop this. I do love this indicator. Gives me that regular trading hour gap, because that seems to be a gap that we like to trade back to whenever we can to find some support. So back to this candle's high is the full range of the regular trading hours. So if we do get a run back down, look where regular trading hours puts us, right in the middle of this fair value gap, mean threshold, consequent encroachment of this BISI. So I'd like to see that come back down here for 10 o'clock. We've just run out some highs now. This is such a nice one. Look at this consolidation. This is the reversal of what we showed you on the other one. Consolidation, expansion, retracement, back to a level of consolidation, and then expansion again. So nice. Also consolidation, expansion, above, body closes above. Let me show you this. I like this. See this fair value gap here? Once it gets filled on the other side and we go through it, now it becomes an inversion fair value gap. So we're literally a body closed above it. As soon as it trades back into it, anywhere inside that, you get long on it, aiming for that old high up there. So 73. There's 100 pips right there. A full $1. That's a lot of money, man. Oh. Derek Loriston. Good to see you, buddy. Oh, I got 6 other people in here. I'm a little late. Sorry. I'm looking at the charts. I haven't been looking at the Skype or the whatchamacallit channel here, the YouTube. I note the Dow 1 hour fair value gap. Dow. Let me get over here. Sorry, let me finish off this because as usual, I'm a squirrel. I see squirrel and I ran off. Let me finish up gold. Yeah, gold. You fickle mistress. The mistress of gold. Old highs. Hit. I like to see that hold, that fair value gap hold now. Bodies seem to be respecting it quite well. So I like to see, you're between this guy here and that guy there. If this one lets go, we get above this New York Open. Look for an expansion above the higher highs. Now that we've come back to this, we could see a continuation on the downside running these lows out. So I can argue both sides of that. We're really inside this fair value gap right now, so you really can't, you got to wait for an expansion. You have a consolidation, an expansion down, return to consolidation, 50% of that consolidation. I'm expecting more of a downside run on gold. But that's contrary to the American dollar. If American dollar is going down, gold should go up. The banks, these Canadian banks, they're on a tear. They're on a run up. Imperial Bank, Canadian Imperial Bank, Laurentian Bank of Canada, that's just sitting flat still. Your American Citigroup, your banks seem to be recovering nicely since October. And what's all our commodities doing? Returning to the New York Open. Oof, they had a big rip through there this morning on soybeans. Sugar. We can't get sugar in Canada. They said that some cane fields had a lot of mold in them or something. So that's why price of sugar is, or sugar's become a scarce commodity up here. You're not allowed to take 1 bag per family. Well, coffee's gone down in price. Should be going up in price. I bought so much of it. Soybeans, oil, yeah. ETFs, look at these ETFs still running up like a blizzard. They're ripping. Running these old highs out. There's little pockets of liquidity up here and these equal highs. So these ETFs in Canada paying crazy amount of interest too, like monthly dividends they're paying. All of these that you see up here are paying more than 10%. Some of them are paying 20 or even 30% return on the money for dividends. So, wow, all taken off nicely. Hamilton. We've been waiting for these guys to go for a while, and they're finally dishing it. E-split. This one here is paying like 20 some odd %, starts again in January. If it drops below $5, it doesn't pay a dividend. So we got a gap right here, old lows that line up with that gap. So my upside potential is 578, which is nice. Same with this guy up here. Real estate. Real estate's come back to the consolidation. We have an expansion, return to consolidation. Quickly rejected off of that. I love that rejection there. Order block's now invalid. Come back, support, looking for higher prices. Anyway, let's get over here. Nobody cares. You Americans don't care about the Canadian ETFs, and you're worried about your other stuff. There we go. Look at that nice little expansion. So you ask yourself, out of these three, which one is the cleanest price action? Consolidation, break above, return to consolidation, high. This little high here, we ran above it, so a return to here. Even the mean threshold of this last down close candle before the swing above this old highs, not that high, just these highs here, creates that little breaker run. So you're looking for this run up into the last runs that ran below old lows. Upside inside that fair value gap. I want to see, you'd have to give way here. Give way for that. I do like the Asian session low. A lot of times we can get a return to the Asian low. Once you break the low, you can usually see a return to it in the lunch hour of London. London's lunch hour returns to the low and then continues to expand down, reaching for lower lows. So now we're coming back up into that Asian range low, order block. Now do we react off of this, or does it stop suddenly? Waffle around in here for the next, no, I doubt it. And come back down. We want to see that fair value gap stay open, enter back into it to this old high, leave a little pocket open as a breakaway, and then start running for these old highs back here. Well, now which one is cleanest to do that? Well, this guy looks like hasn't got an impulse leg. We just have a return back to consolidation or fair value. SIBI pulling back to the order block. The thing I noticed is that NQ already went below the equilibrium, the current range. Dow has not. ES appears to have just hit a breaker on the 1 hour gap, 1 hour chart. I'd like to see a return into this consolidation. This one looks the cleanest because we have a down, We have up, return to consolidation, high, we've already gone through this order block. That just hit the perfect really off the bottom of the Asian session. This wicked over into here. We're in a premium portion of this range now, the London range. So now you still have that, I think, Derek, you were calling for that NASDAQ still has upside on the weekly. We're basically inside this range here, so good consolidation. So we either come back to this and blast through it, or come up to this one, run back, and either, if we're going to expand above or below here, we got to get through one or the other of these consolidations. On the 1 hour chart, ES has hit the breaker. Now, is this the short from here? So let's go to the 5 minute. Let's blow this guy up here. You just filled that little pocket of fair value there. We've run into all these equal lows here. Now, if we're going to return to this consolidation, one minute chart. Okay, let's get back to the 15 minutes here. right back to the mean threshold. You want to see this expand now to the upside. Catch up to these guys. See, the thing is, we didn't take out a high. I'd like to see if this took out these highs. I would really, really like to get in on that for a short. This leg pushing through the Asian high with an expansion down and retracement back into that leg. I feel a lot more comfortable getting short on that from there. It's like this one here. Leg went above. Come back into 50% of that leg, short. Will today be respite? Okay, so this is where I'm looking for off of this guy here. Stop loss will go right above that high in London. It was just a small little banger I'll put on here. If we can get up into this fair value gap higher, we're in a real premium range there. Stop loss will go above the sessions. There looks like there's a small little tiny piece above these highs here still. Look at this. See that there? That's the only thing that hasn't been filled yet. So if we lose this, is that a down close candle or up close? Open 37.5, close 36.5, so it's a down close candle. If we lose this threshold, look for this fill here, just to run out those highs at 10 o'clock. 3 more minutes though. Or we're just coming back to Asia's low. This is where I want to see the wick do the damage. Yeah, I agree with you, Huddleston. I think it's going to reach for that high. If we just get a run out on London, just a small little pop above there into that little range right there, that would clear out London's high, return back into a breaker, ran these lows, and then reject off of that. Aim for all that lot down here then. Oh, there's a ton of liquidity down here. So that would be my, if you were saying, Derek, if we get a little bit of respite today, we end up coming back down into the range again, that would be a nice little high to take out. Give people a false idea that we're running above these highs into that weekly fair value gap again. And then bail. Then Christian bail this thing. Christian bail it. Open minority bullish. We got 1 more minute. Dare I go for a coffee now? With 41 seconds. Stand by. I will be back. what has happened since I've been gone? He said, oh, look at that. It did run up there. Nice. But we were looking for that little run up a little higher, weren't we? That hit there. Perfect fill. This is doing nothing. Few more minutes for this wick to start forming on the hourly. Sammy Sad, how's it going? That order block right there is not done. It's an order block or mitigation because that last up close candle does not run out these old lows here. So that might be just a mitigation off the top of these equal highs here. If we run up one more time, clean these highs out and run back into mitigation there, the body, let me make this bigger. I don't know why I struggle on such big. Here we go. Look for that one right there. Equal highs now. There is a price imbalance on this side. There is a tiny piece of that fair value gap SIBI on this side still open. That'll give you the idea. So we're just hitting the mean threshold. Consequent encroachment, not mean threshold. There we go. Now we've hit it. Right there. I love the way it just bangs on it. Now that's reacting on a 1 second chart. Coming back to it. Look at that. I love that. Just boom, right on it. We get a reaction. Whether we drive through it or not, I just love the fact that it hit this array and you see a reaction off of that array. Like, beautifully. Now if it drives through, I don't care. But if it hits it, and now we start to see on Lauriston's chart, he starts looking at his 5 second chart and looks for an entry here. So go down to 5 seconds. Do we have a potential for an entry short? We take out this low, come back to that consolidation. I'm going to go short there just for the sake, for shits and giggles. I'm going to go short there. I like the return to the bottom of that fair value gap, and my stop loss is going to go right above it. My stop loss is going to go right above that old high there. I may have got in a little early, but I did like this fair value gap here. The fact that we got, I'd like to have seen actually get it below this low here, come back to it and get short, but I'm going to I like the idea of keying off the bottom of that now. So we'll see. I could be wrong. Go back to the 15-minute chart. What time frame do I trade? Man, my friend, we trade on all time frames here. We like to enter in on a 5-second chart like you just saw there. We look at all time frames, look for liquidity that's sitting above that. And we're starting to get really kind of cocky now, trading in, cutting in on our 5-second chart. So you look for the entrance, look, we just looked at there, which was perfect. Now you get down to the 5-second chart looking to get off of that thing there. So that's where I got in right off the, I saw this fair value gap here. We went up, hit it, come back inside it, or right on the bottom of it in the fair value gap. 5-second, so I ran it. From there, stop loss is going to sit above here. So you can enter in on whatever level you like really, but we sometimes enter in on the 1 hour. Mostly on the 1 minute, I think. Would that be fair to say, guys? We look for that silver bullet entry. So I'm going to switch over to 1 minute for each one of these now, because we're definitely in the 1 minute range for silver bullet. So look on your 15-second and 30-second also for a silver bullet entry. If we're expecting this to be a short now, look for a silver bullet entry, because this here, if that was your 10 o'clock, see that 10:05? Here's another one at 10 o'clock. Consolidation, I like that one. That's a really good silver bullet right there. We come back into it, you trade, you go long, you're aiming for up here. That right there is, I don't know how many handles that is. That's 3, and there's another one, there's 5 handles from that consolidation, breakout, 10 o'clock, impulse leg, trade back inside the fair value gap, run above old high into the suspected area of liquidity that we're looking for, that other higher time frame fair value gap, and order block, mitigation block, hit it perfectly, reacted off of it. Thank you, Sammy. Thank you, thank you. What time frame do you prefer to trade on? And do you have a specific asset class that you prefer to trade in? Is the one you like the most? You're entering a 1-second chart? 1-second chart. That's hilarious. Did Sammy leave us? Did he just pop in to say hi? We're entering the 1-second chart too in here. You're trading the 4 hour. Oh, wow. Good for you, man. You got a level of patience that I clearly cannot get. But 4 hours, really nice. Same setups occur on 4 hours. I like it. I like that you can trade 4 hours. It's nice to have somebody with some longer perspective in here as well. 4 hour perspective is huge. You don't mind holding on to it. I like it. So your setups are you basing on the 1 day and then entering in on a 4 hour? Is your higher time frame based on a 1 day? Or the weekly? Like, what's your higher time frame premise? You key off of probably the 8 or the daily, right? My trade usually takes 2 weeks. Wow, a week or two. It definitely gives a better RR. Good for you, man. Sammy's got some cojones, man. He can hold onto a trade for 2 weeks. That's awesome. Okay, my coffee pot must be boiled by now. Let me go get my coffee. Must also be young, Sammy. If you took 4 hour, I might be dead before it hits my target. I hear you, buddy. Oh, looks like I got took out. Did I get taken out? Oh, that's pretty close, man. We ran right through that. So it took out the, let me go back to 15 minute there. So we're inside that mean threshold of that order block there. Mitigation blocks don't really hold a lot of strength though. They don't fail every time, but their potential is to fail. They're not the strongest ones. I'm not going to put a lot of faith in them, but as you can see, we've got wick up, several times here into that order block. So I'd like to see that hold price now. And that inversion fair value gap here to hold price. And there it goes. Good. How's it going, Dad?
Good.
I love my dad. He's so cute.
I already put the thing in there last night for the dishwasher, and you found it, I guess.
I saw it this morning. I hadn't turned it on. So. He's so cute. I love my dad. All right. Derek, because I'm in my 60s. Dow seems to be between breakers on the 15-minute. I look into the 3 days, then go to the 4 hours and find the best entry. Yes, good for you. That 3-day look back. Sam, are you in the charter members by any chance? Are you in Michael's Telegram, private Telegram? The last 2 years, I look for the short trades. 37. To be 37 again. Hey, Derek. Those were good years. Oh, you're not? Okay. I don't like all these bullishness on all these other charts here. Maybe it's going to drag this guy up when I want him to go down. Well, this is 1 minute chart. Stand by. Let me get apples to apples here. So we ran the highs out. Come on, mitigation. Hold out, man. Hold on. Scrambled eggs. About being back in a few. I'm from Saudi Arabia. Ooh, cool. We got a Saudi Arabia guy now. Welcome, Sammy. Welcome, my friend. We got friends in Saudi Arabia. Oh man, if I knew ICT when I was 37, egads. If I could know now what I knew back, or knew then what I know now, oh man. 37, another 21 years before I reach this age. Lord, I'd be cruising. I'd probably have over 100 people in my stream. My subscribers would be at least 100 by now. Can you believe it? We're at 71 already. 71 people. We're growing. We're growing, people. I like it. Yes, would be good. I would close it. It might go down for a bit, I think, but ultimately go back up. Yeah, I'm putting a lot of faith in that mitigation block there. Lauriston. If I take a couple of bucks, I should just take it and hit the road jack. These guys ran out their highs. 8:23. So looking at the 10 o'clock. Look at 10:30 here now. Come back and give Big D some money. Let me check out. There it is, Lauriston. I can break even. Get out. It's just too much of a premium right now, right inside that. We've just wicked up, done some damage. We've got into the mean threshold of that candle. I'm going to hold on here for a few more minutes and see what happens. Despite what I'm seeing here, this has hit a premium inside this range. If we pull the fib tool in here, we're at 62%. Ran up into optimum trade entry. Look for this to return to here. If you want more upside, I want to see that hold price here and then continue for these equal highs. I'm going to pull this right to the top of that now. I'm going to cut down my loss. I don't want to see that get revisited. So I'm going to try and manage this from the back end. It's a little more harder to do when you manage it from the back end because you got to kind of look at order blocks that you know should or shouldn't support price. So if it goes through that again, then I'm out. What do we got left on here? 3.5 minutes. Oh, I don't know, the rejection block maybe. I'll put it right there. You could hit it. Ah, man. See, this is the waffling. The stuff you don't want. 12 bucks. I could take 12 bucks and get out. Get out. Take your commission and run. It said, hey, look, Darren, I'm giving you the last opportunity to get out before I run you. Before I take you out. I'm going to say whatever. $27. One more run up before it goes down. To take these highs maybe. Dang. Where's my 1 minute? What did I say about waffling on my 1 minute? Order block, threshold. That's holding price. Now I don't want to see it get below here, above here. that swing. I want that to be a swing point, because if it means if we're running up above here, then we've got higher stuff to go for. So I'm pulling this sucker tight. You know, run this one down. Maybe get a bit of profit out here if we can get into this. That fair value gap inversion is just holding price. Body closes on it again. Yes, get out, he says. I'm going to trust Lauriston and get out. There. I took 37 bucks loss, Lauriston. You saved me. I'm going to jump into your waiting arms. Thank you, Mr. Fireman. You saved me. Now this house better burn. This is better run up now. Oh, good. Thanks, Mr. Fireman. Ooh, you saved me. That's the rescue referee right there. You're expecting a damsel to jump out of the window, and you got my fat ass jumped out of there. Thanks for saving me, man. Oh, that's good. All right, so we got the 30. That's the run on the high. Return to the old high here. How are you doing in this right now, Derek? You're still in Dow? You're all right in the middle of that range there, hey? This definitely had a heavier or lighter feel on it, a lift. Okay, consolidation. Now I want to see this return to here to get long. You're over the 50%. Looks like you closed on it, opened on it. So that's more bullish for me. But we didn't get a reaction off of it. 62% you didn't get a reaction off. You just, there's definitely more upside. Are you long in this, Lori? Because you were looking at this as bullish way earlier. this could be the reversal. This is why Michael talks about time over price. Time is more important than price. Now, what I'd like to see, if we're going to go short, is this is the Judas 10 o'clock run. I want to see this come down below this, come back up inside a fair value gap inside here, or 50% of this leg. So we're looking at another 10-15 minutes away here for a bunch of candles to run below this low. Create a fair value gap in here and take 50% of that leg. We'll try to predict the future here. How's that? So this could be another half hour away or an hour away yet. But I want to see it get down, come back up into that thing right there, which is also the bottom of that fair value gap. Inversion be a nice scenario. This is in a fill right now of this fair value gap right here on the London. It did not, that's a high there is 946. This is 946, equal highs. I'd rather have seen that punch through that. But look for the New York Open. It's also this candle here and the mean threshold of that candle there. I want to see if this crystal ball trade here, I'm looking for this. SMT divergence. Mm-hmm. 15 minute. Yeah, we never ran out the London high in Dow. You took out London Asian high, so this is the divergence here. The Dow refused to make a higher high. So the sixth sister, or she's just catching up, or these are finally going to give way and come back down. I'm really not that good. I'll be honest with you. I'm not that good at reading SMT. I can see them, but I don't know which one to play. Is it the weakest one or the strongest one or the one that's diverging against the two? I don't know how the markets, which one's the strongest, which one dictates the pace, and I would imagine it's the higher volume one, but what do I know? Tech seems to be the big push right now. So let me get back to my crystal ball trade here. Yeah, yeah. So, Derek, do you understand that whole which one's the strongest, which one do you play? I agree. I think Michael has just said that SMT may be supportive of the narrative, but it's not something to base a trade on. Ah, okay. I think if this trade pans out today, this all goes to kaputzi if we trade above that high there. Then my crystal ball trade does not come into play. Because theoretically I'm predicting potentially an hour from now. What's that? 10:30, right? $10, all these lows. It just feels like it wants to come back down here. Order block, valid. You want to see the support price here? Yeah, I agree. Now that we've got a body above this set here, I agree. We should get some support off of this here to go higher. Same thing with this. If we get a support off the top of this to go up, that whole crystal ball trade is out of the is blown out of the water. Which would support 11 o'clock, taking out the 10:30 run higher. Now you want to see this 50% of this hold price off the top of that fair value gap. Find some support at that and go higher. If we run through this, it's crystal ball time. I already don't like the fact that I wanted to see a big down candle create a fair value gap to come back into 50% of this range. This whole choppy chop is not what I'm looking for. So I can slowly see my crystal ball trade getting now dissolved here. We're inside the inversion here and mean threshold of this candle. So if that supports price for the further upside, we haven't got it in NASDAQ yet, but we certainly have got it in the Asia session. into the rejection. You may get one more opportunity right here to get on this for an uptrend. Stop loss to go below that low. It's nice how it come back and keyed off of that inversion fair value gap. Hit it nicely. Now we're just running out these highs. Creates a small little fair value gap here. Trade back into that and continue on the upside. I usually want to see a body get above that to come back into it. But I think Derek's idea of mind you, the Asia sessions here. That's the bottom midpoint of the Asia session. Did not run out that high though. There's the fair value gap. Now popping into it. That's another potential entry. Let's take this one this time. Even though I want to see a body get above that, I like that we had some support off of this. So stop loss will go below here. Looking for more upside. Yeah, I'd like to see that come back there and find support on the NASDAQ. This one here was a nice little consolidation on the 1 minute chart. Came back in, found support at also on top of that inversion fair value gap. We're looking to run these highs. It just run the highs. So I should take my money out now for what I lost earlier. The $37. But I think we've got more upside, so this is finally blowing through that consolidation. It's 45. Come back into here. I want to see this stay open though. Because we haven't got a body that broke that high, that's why I don't have a lot of faith in this one really holding. I want to see, usually you see a body break above it, then come back into it. So these little wicks above are just stop runs in my eyes. So this should provide support. If it doesn't, then we're back into running the lows. There you go. There's the return to let's go long that as well. That's a return to the highs there. I don't want to lose the midpoint of this. If I lose the midpoint of that, then I'm obviously wrong. And this could be just a run back down into a regular trading hour gap again. We're through the midpoint of this, so that gives me an idea that we're probably more bullish. That consolidation, we're through the midpoint of that already. We're eating through on the other side. So yeah, I think I'm more bullish. We'll see where this goes. A few more minutes and I'm done for the day. I'll spend some time with my family, and then we got 2 more days left of this week. My wife's got COVID. I tested her last night. She's got COVID. I tell you. Got a couple of 80-year-olds in the house, and we had COVID. Our next door neighbor had a little party with her kid's fourth birthday. Invited all their friends. It was like a distribution center for COVID. I think everybody got COVID at that party. Now my wife's got it. So we're all kind of I just cemented the door, locked her in there, passed food under the table, under the door. No, we're not too worried about it. Thank you, my friend. Thank you, Derek. Thank you. Returning to the New York Open session. I say it again and again. I keep making the same mistakes. I want to see a bull candle get above these highs, not these wicks. That's when you get beat up in here. That's another good example of wait to get what you want. Like, this is what I'm looking for. Bull candle above, come back in. You don't want the equilibrium to give way, otherwise you could be wrong. But that's a stronger bull signal for me than this. But we did have it here. So, Christmas season could be just the wonkiness of the season. Yeah, it could go either way. It still feels bullish here, because this isn't just a quick stop run for a wick. Though it would look like that on an hourly chart, I suppose. We're looking for morning, Mum. You can help yourself to whatever's in there. You don't have to ask me. So cute. Looks like we're going to come back and fill this first fair value gap here. The midpoint of that, let's see what the midpoint of that is. That's the midpoint right there, where it just bounced off of it right here. Yeah, I don't want to see it go any lower than that. Let's just create a pocket of liquidity here and a pocket of liquidity here. We've already ran the highs out. We're running the highs. Now we're reversing off the order block. That's the last up close candle before I run below that little swing point. We've come back into it, found support at it right there, pulling away. My. So I gotta get above this candle to get any joy for long on this. I'm out of that. That's not what I wanted. That's my last trade of the day, is right here. Almost lost my dad to COVID right before Thanksgiving. Keep your loved ones close. This will be the last day till after the holidays. Husband's shopping day tomorrow and travel on Friday. That's right. Today's my shopping day, then I'm done. Thank you, Greg. Thank you. Yes, keeping your family close is very important. It's very critical for me. Well, now that I'm out of that, it's got free range to go back up now and get rid of this idea that we might have had a crystal ball trade there. Right inside this inversion fair value gap here, do you see that? Right to the bottom of it. Also fill that fair value gap on the opposite side. But you wonder, why did it go all the way past? Well, draw it all the way back through here and you'll see this inversion fair value gap right there. Help price nicely. No, it's just going to make me back the money I lost on my last one, plus the 200 I think I just lost on, or 100 and something on that one. We'll let that ride now. That'll be the bottom of my You're in on the same trade. Good man. What's going to be our takeout, Lori? Where are we getting out of this? Is it back in our weekly again? Or are we just taking out the highs? Because I'm not going to be here to watch this, I'm just going to take out the highs. Because it's 9 o'clock. I'm going to let that sit in there and percolate. If we get above there, that'll be that should bring me up into pretty close to 8% for the rest of the day. It's gonna hold to $4,000. Is that what you said? I can't tell. It's got that little heart in the way there. $400. Well, as usual, my friends, I have a very interesting little poem I found today. There's this thing I read many years ago, talked about what we ask of life. And there's this excellent poem. It's a short one, so I'll be quick. It was written by a fellow named Jesse Rittenhouse. Jesse B. Rittenhouse. It says, I bargained with life for a penny, and life would pay no more. However, I begged at evening, when I counted my scanty store. Life is a just employer. He'll give you what you ask. But once you set the wages, why, you must bear the task. I worked for a menial's hire, only to learn dismayed that any wage I asked of life, life would have willingly paid. I love that little poem because it kind of talks about what we're really here for. We're asking more of life, not just for money, but for love, caring, sharing, helping each other out there in the world. Ask of life, be grand in your request. It's a short life out there, trust me, and Lauriston will know, and some of you have already know, if you've lost family already, how precious it all is. So, if you're going to barter with life, ask for as much as you can get out of it. And you will have to work for it, which is what we're doing here. We're working, but we're asking for what we can do with that. Man, there's so much we can do with this, or I could do with this. The more I start growing, the more money I make, the more money I can share, the more I can help other people. And this time of year is a reminder of that. So with that, I will leave you guys for today. I wish you all the best. Hope your trade works out there, Lori. It's just a demo trade for me, but I hope it works out for you. Well, I love the poem. Oh, good. Glad you liked it. I wish you guys all the best, and I will see you again tomorrow for one of the last 2 sessions, and I'll be done until the new year. So have a great day. I wish you all the best. Love you all, man. Thank you all for popping in. Sammy, thanks for popping in. Semi Sad, appreciate it. All the way from Saudi Arabia. Gotta love it. Getting out there. Love you, man. Thank you so much for popping in, Sammy. Wish you all the best over there in Saudi Arabia. Stay warm, hey? I know it can be kind of rough over there sometimes. And we'll see you guys tomorrow. All the best.